This is simply the greatest time, certainly in my almost 3 decades, to be an independent agency, period. Now's the time to come out swinging. Now's the time to implement digital capabilities so people see the value and you're communicating the value that you provide, not just to your customer, by the way, but to your community. So I think agencies need to be on offense. I think they need to come out swinging. I think they need to be looking at themselves through the mirror, and sometimes that's a little tough. Everybody should be excited. If independent agencies aren't excited right now, they're doing something wrong. This is Matt Masiello from SIAA, and this is the future of insurance.
This episode is brought to you by Ascend, the first modern insurance payments platform that will transform how independent agents think about agency bill and premium financing. Ascend eliminates the labor-intensive processes at the point of sale of figuring out how clients want to pay by providing customers an agency-branded checkout experience that automatically offers pay in full or premium financing options for the customer, letting them decide how and when they want to pay. Not only does Ascend simplify the payments and premium finance process, but it helps simplify the payables process by handling all the carrier payables for premium finance policies and soon for all agency billed policies. Ascend takes the best parts of direct bill and agency bill and combines them into a best-in-class experience for both agencies and insureds. Learn more at useascend.com/future of insurance.
Matt, it's great to sit down with you and share a little bit of your story, SIAA, but also I want to get into the agent channel and how that's looking going forward. So it's good to get your voice on the show.
That's great, Brian. Appreciate it. Looking forward to the discussion.
Well, so give everyone a little bit of background on you and obviously moving into what SIAA is in that.
So I've been in the agent distribution channel for, actually, this is my 29th year. I've worked sort of exclusively with independent agencies for my entire career on distributing property and casualty products. SIAA has been around since 1995. We are a national alliance of independent agencies. We're made up of 48 master agencies around the country, as well as ourselves, and thousands of independent agencies have become part of the organization over the years. We focus in sort of three key areas in working with our agencies. One is market access, which is sort of table stakes. People can access carriers almost anywhere nowadays. Yeah. But the second two are really important. The second one is generating top revenue for independent agencies. As I think you and I have talked about in the past, it's almost impossible for independent agencies to operate on commission income anymore. Yeah. And so we've developed some additional revenue sources for agencies to help them continue to grow. And then the third thing we focus a lot on is what we call agency development services. But we have everything from startup agencies joining us up to sort of larger regional agencies coming on board, or agencies that are in that life cycle of growing. So we have to provide access to services and benefits that really cover the life cycle of an independent agency. The second sort of audience we work with is the carriers, where we do provide distribution support to the carriers. We've got a field organization of about 160 people across the country between us and our master agencies, sort of acting as liaisons and partners between the carriers and the agencies on the distribution of property and casualty products.
To me, it's a really interesting model, having been out in the field and been to lots of different agents. There's been this development over time, as are in lots of industries, away from the mom and pop, local independent individual agency, family business maybe, and part of the community, to the mega, the super regionals, and then they get bought up or merge and become the nationals. And there's a place for that, and not knocking it, and there's value in it, and there's still value in that super local connection. And how do you sort of bridge that and provide the support and the guidance and the scale? So to me, it was, and having gotten to meet some of the master agents and some of the carriers you work with, understanding how you're sort of allowing for both to coexist. Because there's reasons to have both, just like there's reasons to have a small local or regional carrier and a big national or multinational carrier.
Yeah, I always say I have the best job, right? I get to sort of sit right in between Main Street and Wall Street. And spend days with agencies on Main Street, and Main Street is alive and well in the U.S. and I can spend days sort of bridging that gap with some of the largest, national and regional companies in the industry. And the old saying of, all politics is local.
Yeah.
I sort of just translate that into all insurance is local. And 70% of the independent agency plan is under 1.2 million of revenue. Those are small businesses, and
Yeah.
small businesses in communities do business with other small businesses. So I think the health of the channel is actually the best it's ever been. And I actually think some of the acquisition aggregation at the highest levels has been healthy, because it's actually spurred on some entrepreneurialism in local agencies, including the creation of new agencies too.
Yeah. Oh, I've definitely seen that. Some newer agents in a more established place saying, I think we can do this better. And branching out and doing that, really successfully, embracing new ways of transacting and tools and customer experience kind of mindsets. It's been cool to watch that, and thinking about it's not a dead channel at all. It's like the rest of the industry. It just needs to evolve how it's serving customers, and there's value in that.
For 29 years, many of us, or for many people longer than that, we've heard that we're an antiquated distribution system. Independent agencies are dinosaurs. This thing's going to put us out of business. That thing's going to put us out of business. We provide a service nobody wants anymore. Over the last 3 or 4 years, all of a sudden, we don't hear that anymore.
Yeah.
And actually, surprising to I think everybody, it's actually the exclusive channel that is contracting or receding right now. And we win from that as well. I think that makes our own way of success even longer as independent agents.
Well, so you teed up the question I want to get into, which is, I remember, and I've shared the story with you, but my literally first day in the industry as a newbie at Liberty Mutual, just like came out of employee orientation in the morning, and my boss was like, one of the things we're going to get into is, you've heard of this internet thing, right? Well, agents and brokers are going to be gone soon enough. Of course, I had heard of this internet thing, and that's how long ago it was, but I've been hearing that same war cry forever. And except it's been dying off in the past couple of years, or maybe it's not about the internet, but there's something new that's come into place of the internet in that conversation, and it's embedded. And this is one where I think, is it just hype? Is it people fear mongering, or, blowing something up too much? Or is it real? Because with embedded insurance, the insurance transaction is basically invisible. It's just comes along with that main thing that you wanted to buy, whether it's a product or an experience, a car, an Airbnb stay, or an airline ticket, or whatever it is, or your mortgage, the homeowners just comes along for the ride. There's no place to insert distribution in that. So is this a different moment? Like, how do you think about embedded? And I want to hit on a sensitive subject, but it's huge right now. It's getting a lot of focus, and I want to get your perspective because you're living this stuff.
Yeah, look, to your point, I came into the industry and banks were going to put us out of business and sell insurance to all of their customers, right? Everyone that walked in and talked to a teller was going to get an auto and home quote, right? And then the internet was going to put us out of business, and then InsurTech was going to put us out of business. And here we are with embedded, and sure, embedded's going to take a chunk out of distribution, but I think it depends on what it is. And for people, as people build up their assets and need an advisor in protecting them, have we solved for my auto insurance is embedded in my lease, but I've got my home and I've got 2 other cars, and I need an umbrella, and I need I was just dealing with somebody that needed a certificate for something for my own insurance. And so it solves a little bit of an issue. Like, I think many of us are comfortable, if we're booking an expensive vacation, maybe, that we're going to buy trip insurance, and you could see that being embedded in something. But it's also being provided by American Express, or the travel agent sends you the link to Allianz, right? So it's there, it's real. I don't think it's not going to wipe us off the face of the earth from a distribution standpoint. There's an average of 7 to 8 policies, or 9 policies. I can't. State Farm used to have that number of policies in a household, and your embedded insurance may only cover 1, right? So what do you do with the other? What do you do with the others?
Yeah. Well, And what's interesting is when I talk to carriers who are doing embedded work, like I had Angie Klett on from Nationwide, and her team is behind a lot of those partnerships, Ford with Rivian, with lots of other players on the embedded side. But then she talks about the agent channel, and she used to be part of the agent channel. So she's like, not everyone wants to buy that way, and not every carrier wants to accept the risk that comes in that way. It could be a great risk. They just may have too much exposure to, that type or that geography or whatever. So actually, there's a lot of times where you do need to opt out, and then you need that advice. Or like you're saying, my wife and I have two different brands of cars.
Right.
So whose embedding do we go with? Because I want that to be on one policy. It has to be on one policy, really. How do you we've talked to Nigel Walsh. He calls us out. It's like, is anyone thinking about how you service like 73 separately embedded, unrelated policies that actually are supposed to be part of the same thing for very good reason?
Hey, I got two 17-year-olds that are driving. Tell me which one's embedding insurance. I'll go buy it today.
Yeah. It is an interesting point, though, that some people will still need the advice. There's still complication, but is it more than that? Like you talked about looking at things beyond commission for agents to, to sustain their business. That must mean there's more than just the transaction to it. Is that how you think about it?
Yeah, I mean, I think sort of shifting over to that piece, there's an expense to do business with insurance companies that is beyond commission, right? So as we think about how agencies need to survive, we as independent agencies need to be targeting the appropriate business, whether it's a class of business, a niche, or whether it's targeting, and you and I will go down this path in a minute, but whether it's targeting the appropriate personal lines client that is looking for an agent. But we talk a lot to agencies about when they do business with insurance companies, what's the value proposition? And it is not just commission. It is how good is their service? Do they offer do-it-yourself and mobile apps? Is their claim service top notch? Do they have a service center? If agencies don't look at those things when they do business with carriers, those other carriers are actually might pay more commission, but they're expensive to do business with. So compensation in addition to commission is very important, but as are the capabilities of the carriers that you do business with. When we flip that and we look at it from the carrier side, agencies have to offer value to the transaction, not just for the client, but as agents, not brokers. We actually work for the carriers. So we have to deliver value to the carriers, and value to the carriers isn't entering VIN numbers and answering service phone calls. It's generating business with carriers. And so there might be a little bit of spillage over there on embedded, and there may be even an opportunity for us to get into the embedded space, whether it's in commercial lines and running down certain silos or niches, or get it into the association business that we've all done as agencies over the years as well. So I don't know. I think that all of these things that were our threats over the years became opportunities. And I can't help but think that there will be some, maybe I'm just always sort of looking for the silver lining, but I think there'll be some opportunity for us as this comes up as well. Maybe not with big multinational corporations, but with other opportunities.
Yeah. Well, I mean, you and I have talked about, we both like cars. So we've talked about what's happened in the auto industry with the kind of the pulling back from the sedan market by most of pretty much all of the US car makers. There's very few sedans that any of them offer. Ford's completely out of it. GM's got, I think, the Malibu and some Caddies at the moment. And Stellantis, if you can still call them American, is like the Chrysler 300, and I think, and the Dodge version of it, the Charger, and I think that's it. Versus Toyota, Honda, Hyundai, like take your pick, and they all have plenty of SUVs, but they all have plenty of sedans, and they still sell. Corolla is still one of the top selling cars in the country. So for the Americans, it's like, look, we can't win at this game. We're just going to recede into trucks and SUVs, and we'll do well there. And I've heard that from some agents, like, oh, personal lines is lost. We'll just pull back into commercial. And it's like, well, there's plenty of people coming for small commercial too, just like those foreign car companies are going after SUVs as well. Right. It can't just be we'll just keep pulling back into the corner of the room until we're standing on one toe, trying not to fall over.
Yeah, I think in some instances, and in personal lines, this is a great analogy. We're too soon to admit defeat, and I'll circle back to personal lines, but drive around your neighborhood. there's a ton of sedans, right? And BMW and Audi have come down to a price point that GM and Ford were in at that point, and the other competitors that you were just talking about. The problem with the American manufacturers is they weren't providing a product that the consumer wanted.
Yeah.
Right. And so when we as any industry, and this now we becomes insurance, don't provide a product that the consumer wants, the consumer will go find it someplace else.
Yeah.
There are a ton of sedans out there, right?
Yeah.
Just not American made sedans anymore.
Right.
And so from an insurance standpoint, and I've been asked this a lot over the last 2 years because of some transactions and things that I've been involved in, and I get asked all the time because we're almost a little bit over 50% personal lines, and for us, I mean, that's $5.5 billion of personal lines within our ecosystem, written by our member agencies and with our partnering insurance companies. And there are consumers that want to use an agent. And so, we talk a lot to the agencies about going out and proactively finding the client in their community. And I always sort of say community, geographic or digital. And ideally, agencies are merging those two things if they are a geographically located and not a completely digital insurance agency. But going out and finding those consumers that don't want to save 15% in 15 minutes, that are looking for coverage, that don't want to be the insurance professional in their household. They're looking for that advisor and that advocate to make sure that they're adequately protected. And a lot of those people, by the way, are insured in the captive and the exclusive channel that have a local agent. And now they're going to be looking for another local agent. Just now it can be an independent agency. So there's a lot of that business out there. And so I don't think there is any reason to surrender personal lines or feel as though we're in a corner. We should be coming out of the corner swinging, and we should be on offense in personal lines. It is it's a growing market. We're probably in a little bit of a recessionary period right now, but people are buying cars, people are buying houses, they need the protection, but we shouldn't be going after the client that is being targeted by somebody that's spending $1 billion or $2 billion a year in advertising. We should be going after we need to fight in our weight class and be going after the client in our community that wants to do business with us. So I'm bullish on personal lines. I think it's an amazing opportunity. I think the numbers are now, when they finally get published for 20 and 21, the independent agency channel is now gaining traction in personal lines. The captive channel obviously is continuing to contract. And I think, at least for the time being, we've seen some leveling off of the direct-to-consumer channel because they haven't been able to break into home. They haven't been able to break into commercial lines. And they're sort of a one-trick pony when it comes to, I'll get in trouble for this, but they're a one-trick pony when it comes to, monoline, low limit, not real loyal private passenger automobile insurance. And so they're good at it. Maybe we let them take some of that stuff, but we'll take the rest.
And I take your point, and you're not saying every single customer of theirs that way is going to be that, but it doesn't need to be. When we're talking about the overall majority or the trend in it, know your segment, right? And go after the right segment for what you're offering. Don't chase after a segment that's just looking to get the cheapest thing to meet the requirement and move on.
That's right.
Or doesn't value having that advice. Yeah.
If somebody doesn't value what you provide to them, then move on, right? But we have to. The world is changing, right? And the insurance consumer is getting smarter. What's the number? It was 70. It might even be 80 now % of the insurance buying public starts online, and so agencies have to, and agents and producers have to modernize how we provide our advisor role and information and advocacy to our consumer, which is partially digital, right? And so, our websites and I think we'll go to content marketing a little bit here, but our websites and our content marketing, we have to be seen for our audience as the professional, and we have to provide them the information they need and they want, to the point at which they then also want to talk to a human. But the sale no longer starts with, hey, Bryan, let me quote your insurance. Bryan and his wife have already gone online and they already have some of the basic information. We need to pick it up in that process. And so I always say that independent agencies are not being removed from the insurance cycle, but we do, and this may vary by agency, we do have to figure out where our value proposition is for our agency or for our individual sort of niche that we're running down in the insurance cycle.
Yeah, I think that's really well said. Recognizing that there's a different way that the wholesale is going on. It's not someone walking into your office because they're looking at buying a car, or they just did, or they just bought a house and they strolled down the street and found you. So one of the things I wanted to ask you about was Rogue Risk and Ryan Hanley. Ryan's another very positive person on the channel, obviously, but now part of the SIAA family as well. And Ryan made the statement that he is also very bullish on the channel and not only doesn't see it dying, but doesn't see, like you were saying before, the idea of starting up a new agency as being a non-starter. He still sees that very much, a viable business, something people should be excited about. It's just not the same as, let me go find some office space, rent it, and stick a flag out, and a sandwich sign in the sidewalk and hope that people walk by. Your location may not even matter in some respects if you're doing it right, and you draw people in through content, through engagement, through what you're offering, how you're grabbing them. It's just a different way of going about segmenting and marketing to potential customers. But share with us a little bit about where does Rogue fit into what you're doing with SIAA and with the channel itself going forward, because there's a vision to it.
There is, right, and in our world in SIAA, we help about 400 insurance professionals a year start insurance agencies. And look, the plate glass window on Main Street is still a viable business, again, as long as you're providing the appropriate digital capabilities within that geographic or that digital community. So we're bullish on starting agencies. We do a lot of it. We have a whole program that supports individuals that want to start independent agencies. But the way you start an agency today, digital comes first. It used to be, let's go out and knock on doors and next date and go up and down Main Street and all that stuff. But if you don't have that digital capability, are you viable, right? Will people view you as the viable advisor and advocate? And I think that's where Hanley and Rogue Risk came in, that we were so fascinated with Ryan's vision and his model. And obviously he represents his vision and his model very well. And it is that you can create a digital insurance agency today, but it has to be, and this is his line, and I think a lot of us are still in it now, it has to be human optimized, right? We're not replacing humans in the insurance agency and the insurance transaction. We're optimizing them through digital capabilities. And so where Rogue Risk fits within our ecosystem is really in three places. One, I mentioned at the beginning of the podcast that we provide sort of distribution services to insurance companies. And so, an area where we haven't necessarily done well in is an area where somebody comes to us and says, hey, I'm not ready to own an agency yet, but I'm looking for something new and something different. Do you have a home for me? And so now with Rogue Risk, we can take individuals that are either leaving the captive channel or have been caught up in some of the acquisitions up here, and they say, I don't want to produce for these people. I want more sort of runway for my insurance career. So we can take those professionals, we can create some more distribution for the companies that we do business with. We can then take those individuals and we can create, I think Ryan calls it the no ceiling insurance career, but we can create a farm team or a group of insurance professionals that want to be in the industry and may at some point own their own agency or want to transition to their own agency. And then the third area where it fits within our ecosystem is poor Ryan. I refer to him as our sandbox now. And that's where we're getting in and we're bending and breaking and playing with technologies. And, we've sort of, leaned into supporting agencies in the distribution channel in their evolution to modernize. And Rogue Risk for us is sort of our proving point. If we can prove that certain processes and certain technologies that maybe didn't work in traditional agencies or were never tried in traditional agencies can work here, we can then move some of that success into helping other agencies start within our ecosystem, or even helping agencies that are on Main Street that say, boy, you know what, I've got to increase my digital capabilities. What's working? And so we can go to them and show them that as well. So that was a long answer But Ryan and Rogue Risk really fit well within our ecosystem, and he and his team fit well within our culture as well.
Yeah, the sandbox idea is a critical one that I think agency, carrier, I don't care where you are in the industry, we need to be willing to try things more.
Right.
And it can be hard. And so having a place that, if you're a part of SIAA and you can turn to what the organization is doing in testing and take that sort of refined answers instead of, going off and doing 50 experiments of your own, fantastic. But if you're not, that doesn't mean you should be afraid of it. That doesn't mean you should. And I was just talking to a carrier yesterday who's like, yeah, we looked at this thing. It's much better than what we're doing now, but it would take some effort to put it in. It's like, okay. That's not how you decide the ROI, is just looking at what it would take to do it. You have to look at the benefit. And you just told me it was actually like 48% better results than what they're doing. I'm like, that's a huge lift. Like you're talking about, almost half better. But it might take some work. It's like, we need to get past that fear and try things out and be more open to moving ahead.
You make a really interesting point there. And obviously you've spent a lot of time on both the carrier side and then the InsurTech sort of carrier side as well. And, I think we all acknowledge that some of these startups and InsurTechs that are in the insurance space, in the providing insurance product space, they may or may not be solving an insurance problem, but they've created something within their transactional capabilities or their technology capabilities that either we as agencies or our consumers like, that the traditional carriers haven't solved for. And the traditional carriers aren't making the investments into that space because, they are, but not to the point that would be needed to implement those things, because they still have to run
or the speed.
Yeah, they got to run their legacy platforms. And I say to carriers all the time, hey, that's cool. You should buy that, right? Because you're not going to build it. Right. So buy it and bring some of these technologies and provide them into your distribution or your capabilities. We haven't seen it yet. I don't think we have examples where we've seen it yet, but there's an opportunity for the carriers to buy technology instead of being stuck on, well, we have to build it or it's not.
Yeah. I've seen a couple of those acquisitions, but they haven't done anything with it yet, or they're sort of like leaving it off on the side because they're worried about channel conflict or the messaging or whatever, or it's going to be too disruptive to their core legacy way of working. And that's fine, but then like all you've done is really just tamp down this thing that was potentially moving the industry ahead. You haven't benefited yourself.
We have an industry. The core challenge of our industry is we have an industry that is based on our process. Right. Yeah. We have to answer the questions on the Accord form, answer the questions in the carrier system. We have to submit it to an underwriter. We have to, we have to have actuarially based rates, right? We have all of the consumer doesn't care about any of, and nor should they, right? Yeah. Like they just don't care. And so, we talk about, you and I have talked about the examples, whether it's music or books or video or whatever, the consumer drives this change. Right. Yeah. And again, I'll say it again. If we don't give them what they want, if we don't meet them when, where, and how they want, then embedded will hurt us, or direct to consumer will hurt us. And so we have to get better at this stuff. And I think we are as an industry. I think we are getting better.
Yeah. It just made me think of, I shared with you, I recently changed carriers, and it was on the back of just like one after the other kind of CX exhaustion. I think we were never like horrible things, but it was like, oh, really? This is how this is working with you? Like, this is just so antiquated from a carrier who talks really forward thinking. And then my rates went up 20% despite having no claims. I was like, yeah, I should be shopping because I'm not happy being a customer. And now they're charging too much. But I shared the story without naming names on LinkedIn, and someone responded like, oh, why are you buying direct? You should have an agent. They would take care of all these problems for you. And I was like, well, that's fine. Then I wouldn't experience it, but the problems are still there. And I've just outsourced it to make it someone else's pain. And frankly, like their commission's not enough to make it worth them going through it. And well, they'd know how to navigate it better. Okay, but still, you're not fixing the problem. Right. You're just making someone else do it for you. And I guess that's better for me, but for the industry, agents are still customers in a lot of ways, and they're out there representing you. You should want them to be happy about that and not, be the veneer that's hiding all the cobwebs. So I think for carriers, don't just look at the channel as a way to make up for your gaps in CX, which it'll do. because the agents are, that's one of the things they're there for, but that's not really the long-term success certainly for agents or for the carriers. And I would hope that we can move ahead despite that.
It comes back to what I said earlier, which there is a cost to do business with some carriers, right? There is a carrier out there that has probably the best small commercial package policy and a really great technology platform. So it gets used because we can't touch those policies a whole lot. And so we've got to be efficient in how we do it. And that's why that carrier succeeds so much in that line of business. And, if you're just a little bit off and it's a little bit harder, that is an expense to the agent. And in this day and age where carriers are cutting commissions, and agencies are having to invest more in technology, if you're not easy to do business with, we also are going to find another path to do business with carriers that do provide those capabilities.
Yeah. Matt, in just the last few minutes, I wonder if there's a word of advice or wisdom as we look ahead for agents in particular. I mean, you are very bullish on the moment we're in, and recognizing there's inflation and other complications, but not feeling like the sky is closing in on us, on the channel in particular. What do you say to agents who are looking at the path ahead and thinking about what are the seeds I need to plant right now? How should I be thinking about going after these things and seizing the opportunities instead of feeling like, this will be the last generation of this family agency or this business. I should be receding from personal auto or whatever else. How do you guide someone to have the right kind of go forward?
Yeah, I mean, a couple sort of cliche statements to start it. And one is, and I say this all the time, and I write this all the time, this is simply the greatest time, certainly in my almost 3 decades, to be an independent agency, period. I think the other thing is there was an insurance company president that you and I both know that has since retired that made the statement many years ago. There's 37,000 independent insurance agencies in the United States today. There'll be 37,000 independent insurance agencies in the United States 10 or 15 years from now. It just won't be the same 37,000. And so I think when you talk about like that multi-generational family agency, if they're not embracing digital technologies and moving forward and evolving their business model, then they are going to go extinct, right? And so, I think that my biggest advice is now's the time to come out swinging. Now's the time to implement digital capabilities, whether it's CRMs or whether it's content marketing, so people see the value and you're communicating the value that you provide, not just to your customer, by the way, but to your community as well, through things like social marketing and traditional marketing. So I think agencies need to be on offense. I think they need to come out swinging. I think they need to be looking at themselves through the mirror, and sometimes that's a little tough. I think they need to ask their staff how their staff view their digital capabilities and the services that they provide to their clients and carriers. And I think also, which is one of the hardest things, I do think we have to look at our staff in our agencies. And this is a really uncomfortable discussion for a lot of agencies, because we do have some staff members that we hired and we trained and their job was to service policies and answer the phone and take VIN numbers and do all that stuff. And while some of the insurance buying public still want us to do that, these roles in these agencies need to be sales focused, and we need to have a business development culture in the agency. So digitization and business development culture are I think two of the biggest things that will drive an independent agency's ability to come out and be on their toes and be on offense instead of back on their heels. Everybody should be excited. If independent agencies aren't excited right now, they're doing something wrong.
That's a really positive note to end on. Matt, thank you very much for the time. And hopefully if there's anyone on the fence, they've gotten off the fence. They know the internet's not coming for the channel. Embedded isn't the end of days for agents either. You don't have to recede from personal lines. There's still a lot to be done, but you got to get on offense to do that.
Absolutely. There's a place for all of us.
Awesome. Matt, thanks so much for the time.
Thanks. Enjoyed the discussion.
Thank you to Matt for taking some time to sit down with all of us and share some thoughts, not just about, what his background is and what they're working on at SIAA, but I think it's so critical to talk about what the future of the channel looks like. And it's not a given. It can go lots of different ways, but it depends on how you engage in it right now. And I think he is absolutely spot on. There's some realities to face and then to take some action. be on offense, right? There are things you have to do proactively to exist at any point in time, not just now, not just with the things developing right now. But I think he's actually right. As much as it may seem like there are some very credible threats to the channel, or there's dynamics shifting that could be difficult for agents, I think that's totally a choice in your hands. How are you choosing to engage in those changes, those opportunities? And therefore, it becomes a really exciting time. And Matt's not just saying that. He is genuinely excited about the future of the channel. As a guy who knows, he sees across so many agents so many times, it's his daily life. He would have that perspective to understand firsthand. And he also, is living a lot of the changes we need to make sure that any given agent can succeed going forward. So great to sit down with Matt and to get some of that view. Huge thank you to Matt and the team at SIAA for giving him up for a bit. Full disclosure, we had to do this twice because Zoom messed up the recording. I'm going to blame Zoom. I'm not going to blame me. It just recorded me, which was not very fun and made for a very boring podcast. So even more thanks to Matt for doing double duty on the show. And also a thank you to Ascend, who made this episode with Matt possible. And it's another organization that is part of that story of helping to make the insurance agent channel successful. And of course, they support the insurance industry much more broadly on the payment side. But, a tool that is part of that vision of changing the way agents can interact with their customers, meet that customer experience need, be more digital, be more like everything else we do in our lives, right? The way we transact outside of insurance. Why does insurance have to feel so different? Ascend is really doing a great job at taking away that friction in part of the insurance process. The payment part is such a critical piece of it, right? So thank you to Ascend. And thank you to all you for tuning in. I hope that this was valuable. I've gotten into so many conversations about the agent channel with people in person, online. I know it's something a lot of you are thinking about. So hopefully this was a valuable perspective for you to dig into. Share it with people you know. Maybe there's an agent in your community, or maybe you're part of the agent channel or the broker channel community. Send this around, and hopefully there's some insights or some energy that Matt brings that could be really valuable for you and those around you as you look forward. And the best way to do that is just go to future-of-insurance.com/podcast. You can get Matt's episode, all the others, share them really easily, subscribe. And of course, if you have the time, rate and review the show on your favorite podcast platform, or give it a like and a subscribe over on YouTube. I would be greatly appreciative. So with that, I will say goodbye. Thank you, all of you, and I will see you back here next time.